All right. I hope everyone's having a nice weekend. I am looking forward to this update because I think this one is going to be very relevant to the environment we're in right now in a couple of different respects. Okay. Just as a reminder, I'm not a financial advisor. I can't see the future. I have very strong convictions, but these are my opinions. Do your own research, use this for your education. All that being said, these markets specifically today, I'll be talking about Bitcoin on the high time frame, and I think the setup that we are in the midst of right now. I'm going to compare that to the chart you're looking at right now, which is a 2-month chart of Eli Lilly and Company. And then I'm going to do a quick run through on the Bitcoin miners utilizing the ETF. So we're going to dive right into it. And what I think is going on right now is what has unfolded already in a name like Eli Lilly since the 1970s. And essentially what I'm trying to illustrate here are two things. And the first thing I'm going to do is take you through this macro wave count to show you what an extended fifth wave looks like in its characteristics. And then we're going to look at the similarities in this technical setup with what we're dealing with Bitcoin and derive a few thoughts from that. I will start off by saying I think markets are going more higher than I think even. I think my targets will end up being a bit conservative. You don't see fear and greed in the stock market at all-time highs very often. In fact, I have not seen that in my career that I can remember. I'm sure that's happened before, but we've got a lot of folks looking to call tops, and so when price is showing us, which is the strongest indicator, by the way, price is the strongest indicator because it's a real time. Every other indicator is lagging, whereas price is showing us in real time what the market is actually, how it's performing. That being said, let me dive into this chart, okay? Really quickly, we've got just a beautiful example of an Elliott wave, 5-wave movement on a macro largest time scale. And for those that don't subscribe to Elliott wave or believe in it or get too much into the weeds, don't worry about that. All we're looking at is the way a market moves. And generally speaking, you've got kind of these 1, 2, 3, 4, 5 movements that constitute, in essence, the cycle. And then, movements within those 5 movements, kind of like a piece of broccoli. You got a big piece, and the smaller pieces are subset and match, the characteristics of the big piece. So you got 5 pieces within a smaller piece, 5 pieces within those smaller pieces, and so on and so forth. And so one thing we look for in certain trends, especially in the high time frame, is sentiment of market participants during certain moves within these bigger movements. For example, the 2 to 3 primary movement, right? That can basically was constituted of 1, 2, 3, 4, 5 moves within it. To use my broccoli analogy, I always look for any extensions within these movements, and we'll get into that in a minute. And hint, 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 when I'm talking about extensions, we've got a major extension up here, folks, in real time. That's what it looks like. That's a 5th wave extension. Here, we had a 3rd wave extension. And how can I prove that? Well, let's just use a quick Fibonacci tool. If I'm taking one origin of impulse and kind of taking a look and seeing where 3 finished, it finished around the 4618. Okay, now let's take a look at where, if I'm going to 3 and coming back to origin of impulse, where did 5 finish? And 5 is right here, folks. 5 of 3, right? So this is minor 5 of primary 3. And then finish at the 1786 extension of origin of impulse. So that's right here. That's where this impulse originated, okay? And so that is clearly This was clearly a much smaller move. This was clearly the smallest move. This was the largest move. That was the third wave. Within a third wave extension, you've got 1, 2, 3, 4, 5 highly distinguishable movements, which we had here. Okay, so that's important. That's important for what I'm going to share with you on Bitcoin next. Actually, after this. Okay, so now that we've kind of gotten that that tutorial out of the way, next I am going to zoom in here again. This is a, get rid of that. This is really important to kind of what's going on right now in our technical picture with Bitcoin. And so two things we've got going on. I'm sorry, I'm moving that around a little bit too much. I just want this to for you all to be able to visualize this. A couple of things we have going on with a technical setup of something like Eli Lily, as I'm going to get to in a minute. So very similar in its 3, 4, and I'm claiming Bitcoin is in this primary 5. Okay, that's my claim, and I'll get to that in a second. But on its way out of 4, what did Eli Lily do? What did Eli Lily do? Basically, was in a price channel that was vertical. These are massively bullish. And once these price channels in something that's massively bullish is broken out of, that's when things get moving the steepest, okay? That's when things get moving the steepest. And notice in this price channel, we had a series of consolidations. I'm calling this, 1, 2, 3, 4, and this 5 move. And if we look at, I don't even need to use the fib tools here because, right, 1 was the smallest, 3, right? That's the size of 3, and so far we're in 5. That's a 5th wave extension, folks. That's a 5th wave extension, most commonly seen in commodities. And Eli Lilly most certainly isn't a commodity. However, it is occurring where you'd also expect to see it towards the end of a cycle move. And I've got this cycle primary count at 5. Okay, 5, and that is the final movement, right? 1, 2. Oh, sorry. You got 1, 2, 3, 4, and 5. And this is what I'm calling the entire cycle for Eli Lilly. What's to come when and if this tops out, right? Protracted bear market, which could last years and years and years. But we're not there yet, in my opinion. And so in this ending 5th, you've got a 5th wave extension. Just beautiful. And looking at this 5th wave extension, what are some fib relationships from this 3 to 4 bottom? We saw a consolidation at the 1, 2, 3, 6. We saw a big consolidation, time-based, proportionate to the rest of this channel at the 1, 2, 3, 6. And then you got a breakout above the 1, 6, 1, 8, where you got another consolidation prior to making a move out. And again, another hallmark of these extended 5ths, as you can see in this, maybe you can see in this illustration, is it's constituted of 1, 2, 3, 4, 5 moves within it that are very highly distinguishable. Okay, much like we see here. All right, that was a lot on Eli Lilly for those of you that don't care about Eli Lilly, myself included. But I'm setting the stage for what I'm getting to next, and that is what we all care about. That is Bitcoin. So I just shared with you the high time frame count on Eli Lilly, and I'll just zoom out for a second, and this is what I think we're dealing with Bitcoin here, where we're in the midst of completing this, right? We had a 1, 2, 3, 4, and we're coming into 5, 5, a 5. Basically an ending cycle type of move is my expectation. And so let's look at some of the characteristics of this 3, okay? This 3. Remember, we had it within Eli Lilly, we had an extended 3rd wave in this 3rd move. And so what do we see here with Bitcoin? And now I'm going to bring out another element that's more relatable, because I don't remember my sentiment. I've never had any sentiment towards Eli Lilly. That move's been happening in the background, right? I haven't been paying attention. And so let's take a look at Bitcoin in a move that I can highly relate to in terms of sentiment of an extended 3rd wave, which I contend we saw 1, 2, extended third, 4, 5. And in this extended third, you've got 1, 2, 3, 4, 5 clear, 5 clear moves. And let's seek to prove that. Well, let me prove it using Fibonacci if it's not clear on the illustration. So from origin of impulse, we got to the 3 extension. Okay, so I've got 1 origin of impulse, 3. Now let's compare that to what the 5th did. And this is not, this is, I don't even know if I need fibs to show you this, but what did the 5th do? The 5th got to the 1, 2, 3, 6, a little bit past the 1, 2, 3, 6 extension. So, you know, much less than the most dominant move was this. The weakest move, in fact, was the 5th. This was the weakest move. Okay. And so what was sentiment like in Jan 2021? Remember, Tesla added on its balance sheet. Coinbase was about to go public. It was one of the most bullish, sentimental times in crypto that I can remember. Okay. Why was that? Why was that? We were in an extended third, folks. We're an extended third. Okay. A normal third would have ended somewhere around 24K. Okay, 24K. That would have been a normal third movement. We almost doubled that for the third wave. And so sentiment was hyperly bullish, expecting much higher targets, myself included. What ended up happening? The market was actually completely offsides. We got much lower targets. Okay. Now, where are we now? We are in the midst of a very similar structural setup as I just shared with Eli Lilly. It's almost textbook. When you look at powerful trends in assets, the strongest assets that are in the strongest uptrends, you see a lot of commonalities, right? You see a channel of price behavior, and then eventually you break out of a channel. This is the most bullish time. That's the most bullish time. Anything less than massively bullish right now isn't supported by the data, isn't supported by the high time frame. Could it go to 60? Sure. Do I care if it goes to 60? No, I don't care. Why should I care? Look at the structure. Where is it consolidating? I hear calls of distribution. Sorry, folks. This is what distribution looks like. Okay. This is what distribution looks like. Let's throw up our 30-week. Right now, our 30-week is still in an uptrend. Until we get some consolidation around it and we break that 30-week, that's when you can start looking at thinking about distribution and is this trend, in fact, going the wrong way? We aren't there yet, or hasn't happened. So that's premature to think about that. Of course, everything's a possibility. But where the location of this consolidation, awful circle, the location of this consolidation as it relates to all this price action is also telling you a story. This is happening above it. So when we look at the relationship between these structures, we've got a first wave move, second wave correction, third wave move. This is not an extension, folks. That is a normal third move in proportion to the first. Okay, slightly larger, not by a lot, much like we saw with the Eli Lilly chart I shared. And so I believe we are setting up for an extended 5th because sentiment here at this point with this structure that I'm technically, the technical structure that I'm sharing with you today and the sentiment and the lowering of targets, remember, this is the opposite of what was going on here. Raising targets, extended third. Normal third, taking longer, consolidation. And we've got people calling for, you know, it's done at 100. It's done at 110. It's done at 130. It's done, you know, at 95. And so this is setting up for the exact opposite to happen is what I'm getting at, And that's it, folks. That's what I wanted to share with this. And so much like Eli Lilly, what did we see? A consolidation in what 1, 2, 3, 6? We're just below it, consolidating. Where was the next consolidation? 1618. Where's the next? Where's the 1618 here? That's at 135,000. And so that's it. That's my case for where I think we are and how we're setting up for an extended fifth wave. The last chart I'm going to go through is a chart of the Bitcoin miners. And again, the Bitcoin miners are telling me that there's a lot more to go with this Bitcoin move. There's a lot more to go, in my opinion. What do we have? We have the most bullish ETF chart in all of finance. I mean, that's objectively speaking what I believe I'm looking at. I've got compression. I've got a spring. I've got an LPS. I've got another LPS. I've got a sign of strength, sign of strength, sign of strength, consolidating over that entire accumulation range. Okay, I'm sorry if that's not clear with all the imagery I've got up there, but this is just a massive sign of strength in the form of a pennant structure. Okay, a pennant. And we broke out of it a couple of weeks ago. And not only we break out of it, but we broke out of it on volume. Volume is starting to come back in. If we look down at momentum, this line here tells us a lot. Anything above this line in the past, anything above this line, check back above it, we're checking back, led to at least another 2 weeks of impulsive behavior following it. So my expectation is at least another 2 weeks of impulsive behavior. Since we're in a third wave, in my opinion, 3 of 3, see 3 up here, my expectation is for this to be the most powerful. Simple as that. Simple as that. So WAGMI, in my opinion, gets from 40 to 60 sometime in the next few weeks, 2, 3, 4 weeks, before I'm open to some type of corrective move, and then a final move to complete the minor 5 of 3. If there's one bearish thing about this chart, let's just put it in candle formation. The only bearish thing I can find in this chart is that candle right there. And so could we get some weakness next week? Of course you can. That's what a candle like this is, potentially warning people of. However, that being said, let me go back to this line chart. In true strong breakouts of accumulation, let's think about it this way. Bitcoin at 30K. This is Bitcoin at 30K. Okay, this is the 30K level for Bitcoin. Did we get that check back to 30K everyone was looking for? We didn't, because it was truly an accumulation range that was broken out of, that was strong, that had power behind it, which did not reward people for waiting for the breakout and just catch the check back. So sure, it could check back. Sure, it could fail and come back down here before. I mean, there's all options. Everything can go up, down, sideways. But my expectation is if we get some early weakness, for it to get bought up quickly, and looking back on this chart next week, not to see much of anything as it relates to that. So folks, that's the end of the video. Hope you have a great rest of your weekend. Take care.